Morning, guys. It's Thursday, May 1st. Welcome to a new month, 5:26 a.m. Central Time. Grain markets are mixed this morning. July corn futures up 2.5 at 478. July soybeans down 4 3/4 at 1039 3/4. July Chicago wheat up 2.5 cents at 533 1/4. July Kansas City wheat up 3 1/4 at 532 3/4. July spring wheat down 1 1/4 at 595 3/4. We've got some news out of Europe, of all places. Why don't we start there?
The European Union is expected to classify the U.S. as a low risk country under its new deforestation law. The regulation, which is aimed at lowering deforestation tied to EU consumption, requires commodities such as beef, timber, and grains to be traced to their origins. With the U.S. likely receiving a low risk designation, European importers will face minimal checks on U.S. commodities, helping to ease concerns that the rule could worsen trade tensions. In contrast, Brazil is expected to be categorized as standard risk despite its climate efforts, which could affect its exports of key commodities like beef and soybeans. Only countries subject to UN or EU sanctions will be designated as high risk. A final vote on the law is scheduled for mid May.
There has been some deforestation in the United States. Between 2013 and 2023, the U.S. lost approximately 118 million acres of tree cover, primarily due to wildfires, urban expansion, and some logging, but it's not due to expansion of agricultural land. We know that we're not expanding agricultural land in the United States. As Mackenzie alluded to, Brazil could be guilty here. They've had deforestation also, and agriculture expansion is a big deal in Brazil. Cattle ranching and soybean cultivation are the primary drivers there. So Brazil could have some problems with the EU here. When it comes to imports, the EU has been or is projected to be this year the second largest importer of corn, behind only Mexico. And with soybeans, second largest importer. They're a distant second behind China. With regard to the United States, they've been a smallish buyer of corn this year, 5.6% of all U.S. export sales. It's enough to move the needle in some regard. You're talking 3.3 million metric tons. I think all of it's been shipped. They're the second largest buyer, Europe, the second largest buyer of U.S. soybeans on the export market, accounting for 10.5% of all U.S. export sales. So they absolutely do matter. Mackenzie, I mentioned this to you or asked you before we taped. When it comes to beef and pork and those sort of things, do we ship much to Europe?
Not a significant amount. The market there for U.S. pork and beef is relatively small.
I think this is a story that we might talk a little bit more about. It seems like because of the trade war, trade flows are shifting a little bit. So Europe could become a little bit more important depending on what happens. Let's go to weather.
Rain systems sit over parts of Iowa, Illinois, Minnesota, Michigan, and Indiana early this morning. A secondary band is moving across portions of South Dakota and North Dakota. The system was expected to bring totals up to 2 to 3 inches in some areas of Illinois, although most areas are likely to see lesser amounts. The eastern Corn Belt and Mid South are slated to see rainfall later today and into Friday and Saturday. U.S. corn and soybean planting progress was ahead of average as of Sunday.
This is all happening in real time, so we don't have any totals for. If you guys have some overnight rain totals, drop them in the YouTube comment section. Forecast over the next 5 days favors rains mainly in the eastern Corn Belt and in the Mid-South. In the West, you're talking Iowa, Minnesota, Dakotas, down into Nebraska, Kansas, Oklahoma. Really not much rain to speak of aside from what you've already seen in some of those places. Even when you go through the 5 to 10, a lot of the central and western Corn Belt is going to remain dry. Noteworthy here is that you'll see some additional rain in HRW wheat country in western Kansas, Colorado, North Texas, Oklahoma, places like that. The wheat market has been under quite a bit of pressure, and I think that's a big reason for that. Looking at the next 14 days, good math from our friends at Crop Profit here. U.S. corn country, on average, will see 96% of its normal rainfall, so pretty normal. But it's kind of have and have not. The eastern Corn Belt is going to be wetter than normal, and the central and western Corn Belt and the call it northwest Corn Belt up into the Dakotas and Minnesota will be drier than normal. So you're still talking normal-ish. I don't see anything here that's going to delay planting in any real meaningful way. To look at the last 14 days, a little bit different view. There was some above normal rainfall in parts of Iowa, parts of southeast Minnesota, parts of South Dakota, but planting progress remains ahead of schedule.
The US economy shrank by 0.3% in the first quarter, marking the first decline since 2022. The contraction was largely driven by a surge in imports as businesses rushed to stock up ahead of Trump's tariffs. A slowdown in consumer spending, which fell to its weakest pace since mid 2023, also influenced the contraction. The GDP reading was well below the 2.4% growth recorded in the fourth quarter of last year, and also lower than the 0.4% increase economists had projected. Net exports during the quarter reduced GDP by nearly 5%, the largest negative contribution since 1947. Growth during the first quarter was also influenced by a 5.1% decline in government spending, largely due to Doge-related budget cuts.
So that's our first quarter of negative GDP since Q1 of 2022. Our last official recession was COVID related in 2020. So why would increased imports, and we're importing more, I guess, because people want to front run the tariffs. I think that's what's happening. The GDP formula and the reason why increased imports would reduce GDP, it works like this if you guys are watching. GDP in the United States essentially equals personal and public consumption plus government expenditures plus public and private investment. But then you've got to net out exports and imports. And if you have large imports, that's a big negative item that's going to drag GDP lower. And that's exactly what happened here. If you see 2 consecutive quarters of negative GDP, some people would say that's a recession. I'm not sure that that's the actual way that they do it anymore, but that would be kind of like the old school textbook way of defining recession. The financial markets didn't care about this. They cared about it for a second. The S&P sold off yesterday, it rallied back, and it's sharply higher this morning. Through all the tariff noise and all the news and all the nonsense in the month of April, the S&P 500 lost only 1% in April, which is pretty crazy. You had a big downdraft, big rally back, and now things have quieted down a little bit, which is really pretty impressive when you think about it.
If you guys have not checked out our premium content, you sure need to do so. Joe, can you tell our viewers about some of our recent premium videos?
We did 20 questions with Matt yesterday, and there was a lot of grain marketing stuff. Please tell me to re-own. We had one question that came in about wheat marketing. I think somebody had wheat bushels that will be harvested here the next couple months that they can't store. And they were begging Matt to tell them to re-own the wheat bushels. And we talked about that. We also talked about courage calls as it relates to new crop corn marketing was one topic we got into. There was at least 20 questions here. It's always 20-ish questions, but always really great grain marketing questions that come in from premium subscribers. You guys should check that one out. If you're in one of the areas that is seeing some rain here this morning and you're held up, this transition planning primer that we did with Chris Barron is absolutely fantastic. There's a lot of things to consider when you're considering transition, everything from insurance to corporate structure. There's just liability. There's a million different things. And Chris did a primer on this. We're going to have some follow-up videos. I would highly recommend that you watch this. Every response that I got to this video is, Joe, can I forward this video to my dad? Can I forward this to my son? Our family needs to talk about this. We're underprepared. And I'd say the majority of you guys are probably underprepared. If you want to see the premium stuff, go to standardgrain.com. You can sign up this morning. This is a $50 per month information only subscription. You'll get 2 emails per day from us. The Standard Grain Morning Update is out at 5 a.m. Central Time every single business day. It includes every headline that we talk about, charts, graphics, all of my cash grain marketing recommendations. Our 6 most recent premium videos are included every business day. It's a piece of cake to sign up, guys. You can do it on your phone in like 30 seconds. Apple Pay, Google Pay, Cash App, credit card, absolute piece of cake. All the info is super easily accessible on your phone. Just one click to play the videos, no login instructions. Super easy to do. Check that deal out today.
China's manufacturing activity dropped to its lowest level in nearly 2 years in April. The decline reflects the impact of escalating trade tensions with the U.S., which has significantly disrupted bilateral trade. China's official purchasing managers index fell to 49 last month, down from 50.5 in March, slipping below the 50-point threshold that separates growth from contraction. China is expected to roll out monetary and fiscal measures in the coming months to bolster growth and cushion the economy against tariffs. Despite the economic strain, China has repeatedly denied seeking trade negotiations and appears to be waiting for the U.S. to initiate talks.
Yeah, and who knows how real the Chinese economic data is. But I was told, or some people wrote, that this is part of the reason that soybean futures were lower yesterday. I don't think it should be a secret that China's economy may struggle a little bit because of these tariffs and may continue to struggle further. But it's not a good sentiment type thing.
U.S. ethanol production increased last week. Weekly output of 1.04 million barrels per day was up 1% on the week and up 5.4% versus the same week last year. Ethanol stocks were pegged at 25.4 million barrels. The print was down marginally compared to both the previous week and the same week last year. Stocks have pulled back from levels near those seen in the early stages of COVID, yet they remain relatively high. According to Reuters data, U.S. ethanol production margins are currently near break-even levels, with the most favorable margins being reported in the Eastern Corn Belt.
This is all good news. Ethanol production is strong. We're seeing the seasonal drawdown in stocks, you can see here, which is normal. You kind of get into the warmer months, into driving season, and we start using more basis bids across the ethanol processor space have firmed a little bit this week. The board sold off. Farmers are planting. Farmers are not in a rush to sell. So in order to pry these last remaining farmer-owned old crop bushels, the processor is going to have to bid up, and that's what's happening.
USDA reported a flash sale of corn yesterday. U.S. exporters sold 5 million bushels of corn to unknown destinations for delivery during the current marketing year. Accumulated corn sales are up a whopping 26% compared to the same period last year.
Old crop U.S. corn is what I would call ultra competitive on the export market. We don't have much competition. Brazil's not going to have much to export till July. So you want large quantities. We're the only game in town. And sales and shipments continue to be very strong. What did cattle do yesterday?
Cattle futures were lower. Live cattle were 22 cents to $1.80 lower. Feeders saw losses ranging from 120 to 187. Box beef was also lower. Choice was down $2.95 at 345.31, and select was down $1.80 at 322.02.
Looks like new month, new money in the stock market. The S&P is up 67 points this morning. The Dow Jones up 340. Bonds are up just a little bit. U.S. dollar is up a little bit. Crude oil is down $1.60 at 56.61 in the June WTI. Have a great day, guys. We'll be back on Friday.